Welcome back. My name is Arya. I don't waste your time, so let's get straight into it. Evolution Gaming is a company which I've made repeated videos about, talking about how I think it presents itself as a company which can outperform in the coming years, given the incredible growth metrics that this company has had and is expected to continue having, and additionally, the incredible margins and competitive advantages that it benefits from. In today's video, we're going to go over what the business model of the company is and why I think it benefits from such incredible competitive advantages. Additionally, we'll go over some quick financials of the company, such as the margins and the return metrics, the growth metrics, all that type of stuff. And we'll go over the most recent quarterly earnings that the company just reported. And at last, we're going to go over my valuation framework to try to determine whether or not this company is currently fairly valued, undervalued, and whether or not presents itself as a buy given the current multiple. Full disclosure, at the time of this recording, I do have a roughly 4.5% stake in the business. So please take everything I say with a grain of salt, as of course I could be biased in everything that I say. With that being said, what is the business model of Evolution Gaming? It is in fact an online casino type company. And their main line of business is this live casino experience that they're able to sell to the gambling websites, right? So they're not the gambling website in of itself. Instead, they actually make the tables and the games and all that type of stuff, and they're able to sell that to the gambling websites, such as like stake.com, which is a very popular one that like Drake and all the different celebrities, they've done streams of gambling on stake.com and stuff like that. So as you can see, they have all these different type of games. Crazy Time is one of their main games where they essentially just spin it and then you get lucky with the numbers and you're able to win a certain amount of money, right? And of course, they have more traditional games like roulette and blackjack and baccarat, which is a more, I believe it's an Asian gambling game or whatever. So there's that as well. But yeah, they have a wide variety of games that they're able to sell to these gambling websites, such as stake.com. And based off that, they collect a percentage of winnings. And additionally, they have different setup fees and that type of stuff for all these different gambling websites when it comes to actually establishing the tables and all that type of stuff, hooking it up. And they charge tiny little fees there as well. With that being said, what about the financial metrics of this company? Sure, it has a very interesting business model as it stands currently, but what about the free cash flow? What about the revenue growth, right? As you can see, in the past decade, Evolution Gaming has had a outstanding 47% annualized revenue growth. On a 5-year period, that's again also 47%, 3-year period, 40%. I don't expect this to continue. I think it's going to be closer to the high teens, maybe perhaps a more bullish case would be around the 20% mark on a going forward basis. And analysts seem to roughly agree with me here. On a 2-year basis, they expect roughly 17% revenue growth, earnings per share growth of roughly 19%. With that being said, you would imagine with this very high growth rate that the business has a very high multiple. You would be dead wrong. Evolution Gaming has a PE of 21 times on a trailing basis, and they have a price to free cash flow under 20. What that means for you yield people that prefer it that way, that is a 5% free cash flow yield. Now, comparing this to the S&P 500, S&P 500 currently trades at roughly 3.7 to 3.8% free cash flow yield. And by the way, for the people that don't know, the higher the free cash flow yield, the cheaper the company, because it's free cash flow divided by market cap. So you're getting more yield for the amount that you're paying for that business. And again, this is a company that's growing incredibly fast. And if you pay attention to the margins, you would see that they have operating margins of 63% and they have net margins 58%, free cash flow 61%. So if you were to look at the chart, you could see that it's actually expanded over the past 5 years. They went from free cash flow margins of 43% to 61%, roughly a just under a 20% swing in free cash flow margins. Now, most businesses would actually love a 20% free cash flow margin or operating margin, but this business has grown by 20% margins over the past 5 years, right? So again, very cash-rich company, very efficient company, and this is because of the business model that Evolution Gaming has. So as you guys just saw, they have these tables, right? Now, with the way the business works is that there is a fixed amount to set up this table, to hire the personnel and train them and set up the cameras and all that type of stuff. And there's like a break-even cost to running these tables and have them just essentially turn no profit. Now, we could do some back-of-the-napkin math. We could go down here and look at the roughly $1.6 billion in revenue that they just made, and they have roughly 1,600 tables as of December 2023. That means that each table roughly does about $1 million in revenue in any given year. And that means that that's about roughly $20,000 per week in revenue that each table is doing in this business. So if we go over here to each table is doing roughly $20,000 in revenue, and they have margins of, let's just say, about 60% operating margins. If you're to do this times 40%, right, that means that in order to break even on all these different tables, that's roughly $8,000 that each table needs to do in revenue in order for this business just to break even, have 0% operating margins. They need $8,000 for each table on average. But of course, as we know, Evolution Gaming is a highly, highly profitable business, and they're doing $20,000 in revenues. So the incredible thing about this business is that once they're able to eclipse that $8,000 mark, every additional dollar that they make above that in revenues is almost pure margin, right? It's pure profit that they're able to make on top of that. So again, the incredible thing about this business is it's a scale economies driven business. As I've mentioned in previous videos, every single business that I invest in, which if you go to my Twitter bio, you could see all the different holdings that I have in my portfolio, every single one of them benefit from massive, massive, massive scale economies. Amazon, massive scale economies. Salesforce, Google, Starbucks, right? 40,000 Starbucks around the world. That requires massive amounts of scale with all the suppliers and all that type of stuff. So again, Evolution Gaming also falls directly in line with this quality that all my stocks need to meet, which is scale economies. Every single marginal dollar that Evolution makes beyond the break-even point of their tables is pure profit. Again, truly incredible business model, right? Moving on, I wanted to go over some key highlights that I was able to find in the quarterly earnings report. And again, just to remind you, I think the stock sold off nearly like 6% on the day of the earnings. So just keep that in mind. Investors weren't happy with this as a whole. Operating revenues increased by roughly 17%, right? So this does fall back in line with actually exactly the same number revenue on a 2-year forward basis. Their EBITDA increased 15%, and they had roughly a 70% EBITDA margin. Profits for the period amounted to that much, earnings per share that much, and they just have some comments here on what had happened. Live increased by 20% year on year. So the revenues from the live segment, which is the most important segment, increased 20%, and I think the RNG segment, so like your slots and all that type of stuff, was roughly 3%. So that was the drag on the business, right? That's why it averages to roughly 17%. Down here, they, again, talked a little bit more about the revenues, and here you could see the split between live and RNG. So live is, of course, the tables. RNG is like slots and all that type of stuff. You could see that the RNG segment only accounts for roughly about 14%. So 86% of the business is the live segment, right? The more profitable, more established part of the business. Profitability, they talked about how operating margins increased 15%. Wow, yeah, so operating margins increased 15%. That's incredible. Investments, they talk about investments into intangible assets. They probably acquired some tiny little companies. That's what a lot of these businesses do. They have what's called tuck-in acquisitions, which is just tiny little acquisitions. They just want like one part of this software or whatever the case may be, right? Cash and cash equivalents. If you didn't know, and I didn't really cover this, the business has nearly no debt. So they have $1 billion in cash and like a couple tens of millions in debt. Super cash rich business, right? They have no solvency issues on that front. Online casino market. The global online casino market has grown strongly in recent years and is expected to continue to be among the fastest growing gaming segments in the coming years. Evolution's growth target is to grow faster than the total global online casino market. This is really important, right? I think the global online casino market is expected to grow in the teens and the low teens. And as you could see on a revenue basis, EVO is able to grow slightly faster than that, right? In the mid to high teens. The total business grew at 17%, but the live segment specifically grew at 20%. So they're sticking to their word, right? They're walk the walk and talk the talk. No, talk the talk, walk the walk. Yeah. So anyways, over here, I just want to go over some risks of the business. I'm sure you guys are probably watching this wondering, where's the caveat to this business? And this is it. So there is risks with a lot of EVO's revenue not being regulated. And this is something that I haven't really dug into too much myself personally. So I guess that's a flaw on my risk management side of things. But here they mention Evolution's operations are exposed to certain risks that could have a varying impact on earnings or financial position. These can be divided into industry, operational, and financial risk. When assessing the group's future development, it is important to take into account the risk factors alongside any opportunities for profit growth. The development of laws and regulations relating to supply of gaming services that Evolution provides is a central risk factor for the group's future earnings. So if you didn't know, Evolution isn't allowed to operate in all different states and countries around the world. They're very heavily regulated in how they're allowed to operate, where they're allowed to operate, all that type of stuff, right? So if there's any type of regulation that comes in that says Evolution all of a sudden can't operate anymore in, let's just say, Belgium, right, random country, then that could materially impact the business. Since most of Evolution's licensees are active in Europe, the legal situation in the EU of particular interest and is continuously monitored and managed by the group. Despite this, there remains a risk that in the event of legislation being interpreted in an unfavorable or unanticipated way, Evolution's conditions for growth, profitability, and the games that they may be supplied could be changed. Likewise, a favorable interpretation could have a positive impact on the group. One or more markets may be affected by events that may result in rapid changes in the business environment. This is really important. So if they have one country come out and regulate them a certain way, let's again use Belgium as an example, France might be peeking over wondering, maybe we should also follow suit in Belgium's way. And especially in Europe, which is their most developed market, right? If they have one or two countries start to regulate them a certain way or ban a certain product that Evolution provides, or just any other regulation on the business, that could spiral out of control into other countries and other segments of their business even. Additionally, they mention the dividend here. So they have roughly a 2% dividend yield, and this is a business that pays out roughly half of its profits as dividends. So very cash-rich business that pays a massive dividend despite growing at 20% revenue CAGR, right? And they've actually talked about this previously in other reports that I've read, where the only constraint on their business growth is how fast they could train personnel and build these studios, right? So at last, let's go over to my valuation framework. If you didn't know, the way that my methodology works in order to rank order all these different companies is it takes the current free cash flow multiple that the company trades at on a forward basis and divides that by what we expect that growth rate of those cash flows to be. So this is similar to the PEG ratio, if you guys have heard of that, where it takes the PE multiple divided by the growth rate of the EPS of that business. Similar line of thought, except we're doing it with free cash flow. As you can see, Evolution Gaming is number one in line, trading at roughly a 1.45 times growth multiple, and it is in fact the cheapest company in my investable universe, right? So we have the most expensive here, Microsoft roughly double, and Evolution at less than 1.5 times their growth multiple, right? Extremely, extremely cheap. With that being said, what am I going to be doing with this business? I already have a decently sizable position, and the sheer fact that roughly 60% of this business's revenue is unregulated provides a little bit extra added risk that I'm not quite comfortable with, and I need to do a little bit more research before I make it a larger position in my portfolio. With that being said, I wouldn't shame anyone for jumping into the stock now. My average on the company is roughly 117, 18-ish, so it's a little bit lower than today, and my first buys were made at 113 a share. So again, fantastic business, fantastic margins, return figures, growth figures, everything. Wonderful business model that benefits from both network effects and scale economies. That's a very rare thing to see in any business. And on top of that, they have probably decades of growth, maybe not decades of growth, but they have a very long runway of growth ahead of them as people become more accustomed to online gambling. And instead of going into land-based casinos, it's much more easier to just pull it up on a web browser or on your phone or whatever the case may be, right? So massive total addressable market still ahead of this business, and it's a very cheap multiple given the growth that this business sustains. With that being said, I'm curious to hear what you guys think of this company. Are any of you guys buying Evolution given the recent sell-off? What do you think of the competitive advantage of the company and the various regulation risks the company may face in the future? Feel free to leave any thoughts in the comments as I read every single one of them. Have a great day.